What is going on, investors? Back again. Final video for the night, although most of you guys will probably see this in the morning tomorrow. So CRM, Salesforce.com, reported earnings a few days ago. My apologies for not getting this out right on the day it was announced. I have been under the weather. Luckily, I am feeling better now. And so today, we see a massive decline, 8.5%. It bounces back. It looks like a little bit in the after hours. This is a really interesting one. Got a lot of questions on this one on the channel. And so we've had this big gap down here. And so here we are with the price. I'll spoiler alert, I will give you an idea on whether or not I might be buying this one towards the end of the video, which rarely happens. If you watch a lot of my videos, I rarely talk about if I actually would buy a stock. So this could be a candidate for that. Let's walk through obviously the big news is they agreed to acquire Slack. It looks like it's going to go through sometime next year, fiscal year, second quarter 2022. Although these things can be delayed. If you look at Fitbit and Google, and there's probably a whole litany of other ones that it often can be delayed. So I wouldn't necessarily think this is going to go through right away. So that's just something you want to keep in mind. Slack shareholders are going to receive $26.79 in cash and 0.07 shares of Salesforce, which, at we're at $220 share price, is not an insignificant amount of money. So, $27 billion valuation they're putting on the Slack, and they're going to fund it obviously by issuing these shares, but they're also going to do an unsecured bridge facility of about $10 billion. They're going to burn through a little bit of their balance sheet cash and things like that. So they are really financing. The thing to know about Salesforce is this is how the company was essentially been built. They have done tons and tons of acquisitions over the years to bolster up the product offering and kind of spread its reach, so to speak, in terms of what the company offers. So from a grand scheme of things, I actually think this is a good outcome, not only for Slack, but for Salesforce as well, because they have so much experience in acquiring companies and integrating them into their offering and offering it onto their customer base. I think this is a win-win for both companies, although it came at a relatively hefty price. Now, Wedbush sees long-term payoff for a Salesforce and Slack deal. They talk a little bit about how Payoff, the CEO of Salesforce.com, this is really how he's built the company, and he's trying to keep pace with Microsoft. Okay, Office 365 has an offering that's very similar to Slack, and it's used a lot by similar customers to Salesforce. I tell you what, if you're an enterprise customer, you're probably dealing with either Salesforce or Microsoft, or maybe even a mix of both of them. So this is a way for Salesforce to stay competitive with Microsoft, which is simply just a behemoth based on the products they already have, the cash that they have, their ability to acquire more customers. So this is a way for Salesforce to stay positive. Now, we did see a negative reaction in the stock after they reported earnings. So let's jump into these. We've got 3 months ended here, 19 over 20. We went on the subscription side, which is really all they kind of break this out as. We got 4.2 billion up to 5. We'll call that 5.1. On the 9-month side, we're about 11.5 up to 14.5. So we're seeing about, this is 9 months, that's 4 billion, 3 billion. So we're seeing about $1 billion in additions per quarter on average, it appears like. In fact, almost exactly like $1 billion over, because this is 9 months. So 1 billion each month will add on 3 billion, which gets us to this number. We see here it came in just slightly light. So something maybe about the quarter, maybe just something in general. We see total revenues here went from 4.5 up to 5.42. So that's pretty solid. And we see for total revenues here, we went from 12.2 up to 15.4. Solid revenue growth. Again, this is a relatively mature company. When they combine the two entities, you'll likely see a slightly bolstering of this. Although, again, you're going to pay for that with the balance sheet hit and the dilution that you're to see as well. Now, high margin business. This is why this stock trades at an elevated valuation and elevated stock price, because they paid $1.06 billion to make $5 billion in revenues. You see on the 9 months, we spent $3.4 billion to make $14.5 billion. Just absolutely phenomenal margins. You see from the gross profit side, we went from $5.42 billion in revenues and we grossed out $4 billion. Guys, I mean, imagine if these were just as written and you had a business that did $5,420 in sales in a month and you grossed out $4,000. I tell you what, you go on Shark Tank and you say those kind of margins, Kevin O'Leary would be over there succulating as well, because these are just fantastic. And you see here for the 9 months, we earned 15.4 in revenue and we grossed out 11.5. I mean, that's just phenomenal. Okay. This is why this company can, finance a lot of acquisitions like they have over the years, including the most recent one with Slack. Now, it's not the whole story. Okay. We've got other operating expenses here, R&D, marketing, a fair amount of marketing and sales. I mean, this company spends a lot in marketing, general administrative as well. So we got total operating expenses down here at 3.8, just up slightly. Okay. We went from 3.3 up to 3.8. Certainly not bad considering you grew this gross profit by quite a bit. And you see for the 9 months, we went from 8.9 up to 11.2 in terms of operating expenses. Everything looks like it's falling in line. They are spending quite a bit on marketing and sales, but again, that's driving this top line to this very, very high margin business. A lot of it's recurring as well. So while you're spending a lot on marketing and sales to acquire $1 in sales, notice they spent 2.3 in marketing and sales to make gross out in terms of, you could look at gross profit to gross out 4.2. A lot of this is recurring business as, evidence of the margin. So we come down here to total operating expenses. We get down to income, might as well just come all the way down to the bottom line. We netted out $1 billion. Something happened in the last quarter. Looks like I see they had a gain on this strategic investment here. So what I'm going to do is income from operations. I think that's a little bit cleaner because you have some one-time items that is kind of impacting this net income number. So I'm going to look at it from an income from operation perspective. And this is something you can do when you analyze these companies. Always kind of take a look at what's going on here. See, we have this big gain here, and that's likely not going to reoccur because you see here for the 9 months, it's at 1.9. So yeah, it happened. It looked like in maybe some other quarters, but we look at the previous year, we only at 396. So income from operations came in really strong, 224. Take a look for the 9 months as 262. So they had a phenomenal quarter from an income perspective. You see in the previous year, we only earned, I say only, 65 million. Still a lot of money, but it's very, very strong quarter in that sense. In fact, it was almost as good as the whole previous 9 months in 2019. And again, it makes up the bulk of our income from operations in 2020 for the last 9 months. So a very, very strong quarter. I'm actually slightly surprised the stock reacted so negatively, although that tends to happen when this company is kind of, I don't want to say they're blowing up their balance sheet, but it's definitely going to change perspectives here, okay? Because we have 5.7 in marketable securities and we have 3.7 in cash. We'll just blend those together and call that $9.5 billion. Now, so some of this is going to go away. This goodwill number is likely to tick up considerably. So the vast majority of their total assets actually is going to be tied up into this goodwill, which is not necessarily a bad thing when this company is in the business of kind of acquiring and rolling up companies. Now, non-current debt will likely go up as well. You see it was flat kind of over the last 9 months. So this is likely to go up. We're at 2.6 billion. Nothing concerning right now, but at some point this is likely to go up. So we'll see what happens here. We'll see that the total liabilities went from 21 down to 18.9. This is likely to really escalate here once this deal finally consummates. So we'll see what happens. Again, this is a company that is strong from a cash flows perspective as well. And so, nothing really super to be concerned about. A lot of their expenses also can be tied to, stock-based compensation, employee plans, things like that. So they are rewarding employees in that sense as well. So not all the expenses that we took a look at in the previous slide there are all cash. And so we see here we're earning 339 million in cash flows. We did 2.6 in the most recent 9 months. Again, super strong, but you do keep in mind that a company like Microsoft could have done this deal for Slack. I doubt they could have got it through regulators, or it probably would be a little bit harder than a Salesforce, but Microsoft could have done this whole deal for Slack with cash on their balance sheet and had several billion, probably probably tens of billions of dollars left over. So it is a taxing, on the balance sheet. This is going to tax them from a dilution perspective, from a debt raise perspective. It is going to be a little taxing. So it obviously brought in some sellers on the stock. We see how we have this massive gap here. Now, this stock, the last time I did a video on this stock, it gapped up here, and I said I wouldn't buy this stock. I wouldn't touch this stock until it came back into, I wouldn't come back down to earth. I had comments on that video saying, well, I should have bought. Well, take a look. We're all the way basically back. We have this one little lonely candle here that's sitting out here, and here we are sitting here, if basically filled this gap almost perfectly, okay? So we have this big price gap, and what typically happens when you have these big price gaps, now I'm not saying it happens all the time, but I would say a large percentage of the time, the stocks come back and fill this gap. And that's exactly what you see here. This stock, when we talk about gap fill, okay, this big gap was here and we came back about retraced about halfway. Well, the most recent earnings brought us all the way back down to the bottom of the gap. Now, that's not a bad place to start buying the stock. Now, one thing I'm bringing up Intel here, not trying to compare Salesforce to Intel by any means, but the stock charts, in my opinion, look somewhat similar. Notice that we had this big gap here. Now, it's the reverse here with Intel. With CRM, we actually gapped up. With Intel, we actually see this big gap down. And so Intel gapped down, and notice we filled the gap almost. Okay, we didn't quite fill the gap on this candle, but it was very close. And then take a look. We had another gap down, and then take a look. We're almost filling now we're talking about this gap here, and the stock is actually almost came all the way back up into this gap. In fact, this is not a bad trading stock, in my opinion. I've traded it a little bit over the next few months. So the decision I'm trying to make here is what I'm going to do on Thursday morning. Like most of you guys are probably going to watch this video on Thursday or maybe even Friday. What I'm trying to decide with CRM is, am I going to buy this stock as a long position or as a swing trade? Because here's what I think could happen. I think we could do a very similar, and I just brought up Intel as an example, but you can probably find lots of examples of this as stocks filling the gap. Okay, you had this big gap down with Intel, and it kind of walked back all the way up to fill the gap. Same thing here with, we re-gap down here. So this formulation has me worried about Salesforce from a long-term perspective, because they could come out in another 3 months and the stock could gap down and kind of crap down again. So I'm kind of worried about that from a longer term perspective, but from a trade perspective, I would expect this stock to bounce somewhere in here from 210 to where it is now. I would expect it to bounce and potentially come all the way back up into the 230s. I think you could have at least $10 of upside into this. That's the bottom of these candles. And again, we haven't even come close to filling this gap, although you will have some resistance. Step in on this stock right around this level, right around 235. You could even come down here to 230. 230 to 235, this stock will get some resistance point. And so when it gets to that point and how quickly it gets to that point will kind of determine, can we fill this entire gap here? And actually, we're looking at this gap over here. So we've got this gap from where right now we're sitting at about 221 up to anyway about 240, I think is where you could call this one. So if you're in it for a swing trade, personally, I think you could potentially buy down in this range and play it up. I would start looking to get out, maybe start setting a trailing stop loss when you got up here to 230. And I would expect this stock to hit some areas of resistance up in here. But you have a nice little area where you can acquire the stock for in the $220 range, and you can play it up into the 240s. Now, what I'm worried about from a longer term perspective is that we just continue this gap down. We walk back up into this range, and then the next earnings report or the next press release or whatever sends the stock down, and we gap back down. So I wouldn't, if I was in this for a long-term position, maybe some of you have bought up in this area or you're just wanting to add to your Salesforce position, I would do it gently. So in my example, I'd probably look to get about $1,000 $200,000 worth of CRM. We'll just call it about 5 shares based on a $221. I probably will buy, if I buy this in my long-term portfolio tomorrow, I will buy 1 share, okay? Because this stock, we haven't quite, I think it's possible we walk down into the 210s, because when you look at Intel, okay, we had a big gap, we kind of have a little bit of a relief rally, but then the trend's broken at this point, and this stock gaps down. Same thing here. We have a big gap down, it kind of hesitates for a minute, and then it just finds a bottom at some point. So I'm not necessarily trying to pick tops and bottoms here on CRM, but this trend is absolutely blown up. I mean, this is what we're looking at here. And so, I would look for this stock down here at 209, 210 would be a really interesting spot, because you do see, there is a little bit stronger area of support here. I don't want to say this is strong, but it's a little bit more defined. It's also a clear bottom on this gap. We have this gap, but we also have this lone candle just kind of sitting here. So it's possible that we come down all the way to the bottom of this candle. So I'm not saying you need to come in here and pick tops and bottoms. I'm just saying that this is an interesting setup. And I'm not I'll be honest with you. I'm sitting here on Wednesday night. I'm not 100% sure how I want to play this. I just think there is a play here, okay? I think from a longer term perspective, you want to be a little careful with, I wouldn't unload your whole position into this, because I think we could walk up into this range. But this stock could easily gap back down, similar to how Intel did. Now, but from a trading kind of swing trade perspective, I think this gap, while I don't know if we'll be able to fill this entire gap, I think it's very, very highly likely we get it back up into the 230s with this stock, and potentially 235. I would definitely start setting my stop losses or my trailing stops up here in the 230 range, and I'd want to get out of it somewhere in this box up here, just in case, again, this stock pulls back. It pulls back below this 230. Well, guess what? We're coming all the way back down, and maybe even below where it is today. So that's how I'm seeing Salesforce. Leave me a comment down below. What do you think's going on with this one? Interesting stock, obviously a great leadership, just a fantastic stock, $219 billion valuation. Little hefty probably, from an earnings perspective. Again, we saw their earnings kind of really get bled out once you factor in all the cost, but this is the company that's still being really aggressive from the acquisition front and from a customer acquisition point, as you see through their sales and marketing expenses. So this is one you're still playing for the long term. Let me know how you're doing with this one. Are you adding it? If you're long this one already, are you adding? If you want to go long, are you buying this one? If you're trying to trade this one, which direction are you looking at? I kind of told you what I feel about this one, but I'm curious to see how you feel. That's CRM. We'll be back with more videos later this week. Thanks for tuning in. Good luck with your investments.